Ever wonder what you could do with $6,000? Well, I saved it up to pay off my property taxes. Hi everyone, my name is Lily. On this channel, we're all about savings challenges, budgeting, and cash stuffing. And today we will be talking about property taxes. You know, those semi-annual payments that seem to sneak up on you every year. I recently saved up enough to pay my winter property taxes in full, and I wanted to share with you some tips and insight that might be helpful to you. Total of $6,000 here that we need to pay for our taxes. So let's get started and count it to make sure we are taking them the correct amount cash. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 2,000. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 4,000. 1, 2, 3, 4, 5, 6, 7, 8, and 9. 900. Okay. Next, let's count our 50s. 1, 2, 3, 4, and 5. 500. Let's count our 20s. 2, 4, 6, 8, 10. 100. 2, 4, 6, 8, 10. 200. 2, 4, 6, 8, 10. 300. 2, 4, 6, 8, 10. 400. And now, last but not least, our 10s. 10, 20, 30, 40, 50, 60, 70, 80, 90, 100. 10, 20, 30, 40, 50, 60, 70, 80, 90, 200. Okay, for a total of $6,000. So this $6,000 I did save, but our balance that's actually due on our taxes is $5,876.46. So I'll be getting a little bit back, at least $100 back, which I will contribute to one of my savings challenges. Property taxes are essentially a fee you pay to your local government for owning real estate, like your home. It's a way they fund public services that benefit our communities, such as our schools, roads, and police departments. For example, in my area, property taxes contribute to the excellent public schools that our children attend. Planning ahead for property taxes is crucial. It helps you avoid late fees, which can add up quickly. Plus, it can prevent you from falling behind on your mortgage payments and potentially facing foreclosure. I remember a friend who didn't plan ahead for their property taxes. They received a late payment notice and ending up paying a hefty penalty. It was a stressful situation that could have been avoided with a little bit of planning. Saving up for property taxes can be a challenge, but it is definitely doable. I recommend opening a high yield savings account or a money market account, which I have. These accounts offer competitive interest rates, so your money will grow while you're saving. To calculate your estimated property tax bill, you can check with your local tax assessor office to review your previous tax statements. Once you have an estimate, set a savings goal and create a budget to track your progress. Escrow account versus paying separately. Many people choose to have their mortgage lender hold funds in an escrow account to cover property taxes and insurance. While this can be convenient, it is important to understand that you are essentially lending your money to the bank. By paying property taxes separately, you have more control over your finances and can potentially earn a higher return on your investments. For example, you could invest the money in a higher yielding investment account. Consider your financial situation and preferences when deciding whether to use an escrow account or paying property taxes separately. Okay, so now I just created a small graph or chart to make it easier for you to understand the benefits of having an escrow account versus paying your property taxes separately. So the first section I'll go over. So the payment responsibilities. Who's responsible for that? So if you have it in an escrow account, the lender will be responsible for paying it. But if you pay it separately, you will be responsible for payment. With payment timing, so with an escrow account, it will be paid monthly. So monthly mortgage payments are required. But when you don't have an escrow, you will pay that amount directly to the service provider. And then as far as the financial oversight, when you have an escrow account, the lender will be the overseer in regards to paying that. And then if you don't have an escrow account, you will be responsible for paying that amount when it becomes due. So the potential benefits of having an escrow account, it can be convenient, you can avoid late payments, and it's protecting your credit. But if you want to take advantage and control it yourself, as you can see, you will have more control if you don't have an escrow account. You have more control over your funds. Potential for higher returns also, because you will be setting that money to aside. And like I said previously, it's most useful to put it aside in either a money market account or a high yield savings account. And then there are some potential drawbacks that we have to always be mindful of. That includes with an escrow account, you have limited control over your funds and potential overfunding, which cannot be a bad thing because sometimes they'll send you back a refund. And then without an escrow account, it involves increased responsibility. So you have to keep track of when those tax payments are due, most definitely. And then it can there be a risk of late payments if you don't manage that time frame of the due date. So to recap, property taxes are an important expense that you need to be prepared for. By planning ahead, saving diligently, and understanding your options, you can effectively manage your property taxes and avoid financial stress. Thanks for watching. If you found this video helpful, please give it a thumbs up and subscribe for more about my budgeting journey. Check out this next related video.